All right, so everyone, let's start. Just gonna do a little recap of last week for persons who weren't here. Let's go back to the front. Just quick recap of everything that we did. Might take us a bit, 15 minutes, so just bear with us if we're moving a bit fast, but it's just that this was done last week, but for the benefit of everybody, we're just gonna go through it a little quickly, okay? So as we know, the whole thing about accounting is summarizing and presenting financial data in a useful manner, right? And then why do we need accounting so that organization can know what their status is in terms of financial income, right? You want to know exactly where a firm stands, if it's profitable or if it's in loss. And then the thing about accounting is that it helps us to know whether or not an account is a business is losing money or it's gaining money. Now, in terms of accounting and the different terms that we would want to know, owners, that's the persons who started the business, provided the capital for the organization. And when we look at capital, we look at the initial amount that is actually invested in a business. And thereafter, anything that comes after that is actually considered profit. Anything that is removed from the capital is considered a loss. And then management is those persons that are put in place to ensure that the business is at a profit. Creditors are persons who take money from the business, whether or not it's that they put you in on a loan or they are continuously removing money based on the goods and services that they offer to the business. And then employees are persons who work on behalf of the business to ensure that the goods and services are brought forward.
Good
Investors,
evening, Dr. Tracy. Alicia here. I'm bumping in and out of so I will ask for the record to be sent by me when it's finished, please.
okay, no problem. Investors are persons who might not be the owner, who would then go ahead and then offer money to actually allow the business to reach a certain point in time based on what you have actually brought forward to them. And then the government is the person that keeps check as to the amount that you make and whether or not you're paying your taxes or contributing to society. Consumers are the most important part of the firm or the business. They're the ones that actually use your service and they're the ones that ensure that money comes into the business, apart from investors who give a certain lump sum. But if your consumers are having a bad time, then the business will have a bad time overall, right? And then accounting is used for research as well. Now, the different types of organization, we went through those. Sole proprietary, which is just one person, and we said that there are legal implications as it relates to this, right? And then partnership is where you have more than one individual or firms that come together in order to provide a business. The corporation, as we said, I'm not sure why this keeps happening when we put it on presenter view though. But corporation is two or more businesses or organizations coming together to form an enterprise. And what happens is that the lifespan of a business, like a corporation, is greater than that of a sole proprietor or a partnership because when the persons die, the business continues. So that's one of the benefits. And the legal there's benefit in terms of legal implications as well, whereby the amount or the swing does not go on just one person's shoulder, but it goes on multiple persons because it's multiple businesses, as opposed to a partnership where it's like two persons having the burden, or a sole proprietor where it's just one. And then We spoke about corporation already. We spoke about the different types of accounting, cash-based accounting, accrual accounting. I would say accrual accounting is at the end of the year. You have a fiscal year, financial year, and it will show you at the end of accrual accounting, it will show you how much profit is gained from the business, right? Everything is summarized in one big file, and you will know if you actually gain profit or you were operating at a loss. And we were saying that a lot of persons want to achieve a current account by the end of the year. So you would see a lot of banks, a lot of institutions rushing to gain money from their persons who might owe them, and wondering why is it that they keep rushing you to pay. It's because at the end of the year, there's going to be a balance that they want to see if they're at profit or loss. And right. And then we spoke about financial accounting already. That's more important to persons like investors, persons who want to invest, or you want persons to invest in your business. You would want to show them financials. And so the most important of this would probably be accrual to a business itself. But if you want to gain persons to invest in your business, then you need to show them financials. So if you're that you would show them how much is it that you would spend on this particular material or goods that you would use for the business versus how much you would actually gain, and the different services, how much you gain from each service that you have, as opposed to accrual now is like you just want to know if you are in profit or loss at the end of the year. And then cost accounting. And remember, cost is not necessarily a good thing. Cost means that you're losing money, right? Cost means that each time you say cost, it means that it's money that is being used for something else and not necessarily money that you are putting in your pocket. And management accounting as well. So when we talk about the different types of accounts, you have revenue, and everybody knows what revenue is. It's the amount that is added to the capital, right? So capital is the amount that is invested initially. Revenue is the amount that you gain additional to the capital. And then expense, one of a type of expense is cost, right? So expense is everything that is going to be taking money out of the business, right? Without you gaining any much benefit, except that it's used for the business to operate, right? And very popular expenses would be salaries and rent, and then assets. Assets are any property that is owned by the business, right? And you have different types of assets: current, fixed, intangible assets. And we say the current, we say current would be those that we continuously use, so cash, right? Marketable securities such as stock, bonds, account receivables. Those would be accounts where persons are supposed to pay you, right? But they actually owe you. So you haven't collected that money, right? And then we say notes receivables are promissory notes, meaning person supposed to pay you over a certain amount of time, but there's interest added to the time of which they're supposed to pay you. So whether or not account receivables, whether or not it took 2, 3 years to collect the money, there's no interest on account receivables, but there's interest on notes receivables. And then inventory would be the raw material that you have on hand that you can use. And then fixed assets, these are tangible assets that are used in the business, and commonly they are long-lived, meaning that you continuously gain from these forms of assets, but they have a lifespan, right, over which you would calculate. Mhm. And then, yeah, the fixed assets are long-lived, as we said. Intangible assets, these aren't things that you can hold with your hands, but it's just the idea of you owning it. So like copyright, trademarks, goodwill, your company name as well is also an intangible asset. And then we spoke about liabilities, and these are legal obligations of the business to pay a debt. And debt can be paid with money, goods, and services, but usually paid in cash. The most common liability are notes payable and accounts payable, which is the opposite of notes receivable and accounts receivable. So meaning that you owe these guys money of which you haven't paid, so that accounts payable, or you owe persons, but you're supposed to pay them over time, of which you will have interest added. And then we say current liabilities are liabilities that are due within a relatively short period of time. And the current liabilities are used to designate obligations whose payment is expected to require the use of existing current asset. So normally you would use your assets, of which current assets would be like cash, right? So you use your current assets to pay your current liabilities because they are short term. And we said that if you're not careful, you can have so much current liabilities that it causes a problem with you at the end of the year with your accrual accounting, right? Because you might have so much current liabilities that the amount that you are gaining, and with you not collecting all your notes, your accounts receivable and notes receivable, you might end up being in negative, even though you're making a lot of money, but because you have so much current liabilities and you have to be constantly using all of your current assets to pay off the current liabilities, you end up in a loss. And then long-term liabilities. Long-term liabilities are obligations that will not become due for a comparatively long period. And we spoke about different types, and we had mortgage note payable, bonds note payable, and we say usually it's more than a year, while accounts and notes receivables, though, and accounts payable and notes payable, those are all less than a year or less. And then we spoke about the capital, and we said that the capital is also known as the net worth, which is the amount of money that you actually have, right? And you have to be careful because you might start going into your capital, which might cause you to be at a greater loss than before. And then we spoke about the accounting equation, and we said assets will equal liabilities plus owner's equity. Can anybody tell me why this is so? Hello?
So as in, oh, go ahead. I'm sorry.
Why is it that your assets is equal to your liabilities plus your owner's equity?
Because the asset is an asset, but it can also become a liability, so to speak. It can be in debt, but you would be the owner
Right,
of it.
right. Very good. Because if your owner's equity becomes zero, you realize that your asset have to cover all your liabilities.
Right.
Right.
Right. So the basically the way that you're really gonna get profit from your assets is by having owner's equity. Very good. Who was that?
Andre Anderson.
Okay, Andrew. Great job, great job. Mhm. Right. So now the asset of the company consists of the money invested by the owner, that is the owner's equity. For
Mhm.
the example, a loan taken from the bank, that is the liability. And the company's liabilities are placed before the owner's equity because creditors have first claim on asset. So basically, when you're taking out a loan, they're going to see all your liabilities, they're going to see all your equities and see if you will still make a profit based on your equity,
Mhm.
Yeah, equity.
right?
Right.
Then we stop here, which is double entry system. It says today's accounting principles are based on the system created by the Italian monk Luca Pacole, and who developed the system over 500 years ago. And he devised this method of keeping books, which is today called the double entry system of accounting.
Quick
Um,
question before you. I'm so sorry. Before you move on. If like an example of the double entry would be, and correct me if I'm wrong. Let's say there's a certain amount of money you put on a debit card, it would sort of reflect that on a credit card. Is Would that be an example of like say a double entry?
Again, I don't hear you.
Okay. So let's say, for example, like there's a certain amount of money you put on a debit card, it would
Right.
reflect the same as on a credit card.
Okay. Well, the debit card is always the amount,
No,
Okay.
right? Because the debit card is almost like a loan, you know. So every money that you use
the
on your
credit
credit,
card is almost like a loan.
right, your
Yeah,
credit
credit
card,
card
right,
is a loan.
right,
The bank loan you
Yes.
money to use
right,
in order to make profit off you.
Yeah,
right,
well, I can continue.
Basically,
right.
What's that?
So
Ron,
even if it,
basically
Can you hear me?
the double entry system is basically saying that for every credit entry, there has to be a
Mm-hmm.
corresponding debit entry. So if, for example, you have a bank account and you buy something using
Yeah.
a check, you will have to credit the bank
Mm-hmm.
account to reduce it, and then you'd have to increase the item that you purchased to increase that amount. So it's basically balancing out the
Oh,
two effects.
right,
okay.
Mhm.
It has to have those
So
two
if you buy
halves.
something
Okay.
on cash, right. So if you
Yeah.
buy something on cash, your cash account will reduce and the item that you purchase, so for example, you bought goods. So goods will go up and your cash will go down. So that's
Okay.
how the double
Okay,
entry
not a
concept
problem.
comes in.
right. Because
Yeah,
Mhm.
man. Thank you.
you have to show you how you would account for the liability that you're taking on. So if it's the case,
Right.
so if you're taking on, take for instance, the example with the credit card.
Mm-hmm.
If you use $10,000 off the credit card, automatically it is going to be considered some form of a loan, right? And you have to show
Right.
how you're going to account for the amount that you took in terms of paying that, right? So they wouldn't
Yeah.
have it like as credit card. It would be basically a loan, really, right? That's how they
Mm-hmm.
classify. Understand?
Definitely. Definitely.
Right. So recording of transactions require a thorough understanding of the rules of debit and credit relating to accounts. Both debit and credit may represent either increase or decrease depending on the nature of the account. I'm not really sure why it keeps cutting off the stuff, but the nature of accounts, assets, debits, liabilities, credit, owners, what is this now? I'm not sure it's owners is with credit, but this um, probably owner's debt would be a credit as well. I'm gonna have to fix it. But the revenue is credit, expenses is debit. So how is it that you would account for revenue? How is it that you account for revenue in any financial statement? Anybody?
Um, I think if my memory serves me correctly, so long I haven't done accounts, your revenue would be like I think whatever comes in the end of the period.
Right, right. But is it the case that you would add additional stuff and then remove the expenses to get a profit?
I
How
can
does
hardly hear Dr. Lawson.
you're hearing me?
Yes,
What
I'm hearing him.
Right. So what I'm saying is that you have your revenue, which is going to be each financial year, right? And you would the how the revenue sets up is like you would have a certain amount at the start, and then you would remove your certain amount of expenses to find out what would be your gross profit, right? And then now you
True.
would remove taxations to get what is called your net profit. Do you understand?
Precisely. Yes, yes, true.
Right. So assets decrease when you actually give them you're in credit, right? Liabilities decrease with debit, right? And then owner's equity decrease with debit as well. Do you understand this? Anybody get an understanding of what this is saying?
Asset decrease.
So the more creditors you have is
The
the
more your asset would go down,
right, right. And the more
and the
you
more you
debit,
then become a liability
Right.
to the asset that you create, because you'll be losing, so to speak.
But I
Right.
need to do a one-on-one session because I'm not fully lost, but I can see where I'm a little behind on this
Okay.
one.
So remember assets, right? If you
Yeah,
have assets and you start having a decrease in asset, it's considered credit, right? The
right.
credit, because that means the credit is actually causing a decrease in asset. The
Let
liability,
me see if I can try and clear it up for Ryan.
Mhm.
So
liability,
okay, say for instance you're selling bread. That's your
Mhm.
asset. So each time you sell a bread, you decrease that asset, but you will increase your cash. So that's
Mhm.
why when you sell an asset, it decreases. You have to credit it because you're going to debit your income, which is cash
right,
or check.
right,
Ah, I
And
am.
so and it's opposite for the liability.
right.
So that's where the double entry comes in. One account is debited and one account is credited.
Okay.
I don't know if that makes it any clearer for you.
It
Just
does.
like
It
if,
does.
can I say something?
Sure.
Just as though if you have a car, so to speak,
Mhm.
you know that every year going to depreciate, so to speak,
Right.
and your car is a
Mm-hmm.
asset, but it also is a liability because there's no guarantee that you will
It
make
will stay
anything
the
of it.
same.
But you
Ah,
would be the owner of that car.
right.
Right.
I get you.
Is everybody on the same page? I'm wondering if everybody is.
I'm on board now.
Okay. So you understand what is happening here, right?
Definitely.
Okay, all right, cool. All right. So in terms of expense, right? So it says expense to decrease equal credit. What does that mean? Anybody understand? When expense decreases, it affects credit. When revenues decrease, it affects debit. That's basically what it's saying, right? So if it's a case that you decrease your expenses, it is less credit, right? If you're decreasing your revenue, then it's less debit. Is that in agreement or no? Hello?
Yes, sir.
Do you
Well,
understand that?
pardon me?
Did you get that just now?
Yes, yes, I get that.
Okay, all right, cool. All right, so financial reporting statement. So you have the net income statement, which is the profit and loss. You have the balance sheet and you have the cash flow. Anybody in the group are familiar with these three financial statements?
Yes, I'm familiar with them.
You're familiar, right?
Statement, profit and loss, and balance sheet.
Right.
In cash flow. I'm familiar with it.
Okay, good. So it says net income statement or the profit and loss used to inform you about income earned, expenses incurred, and total profit or loss. Remember, we were speaking about having the amount that is actually in a financial year, removing the amount of expenses, right? That will give us at the end a gross income, and the gross income is what we gain without taxation, right? When you remove taxation, then you get the net profit, right? And then the balance sheet is a snapshot that gives the overall picture of the financial health of the company at one moment in time. Therefore, take for instance, you want to know how much the company had gained over a certain quarter of the period. You always hear people say, how much have we gained over this quarter of the financial period, right? So you would gain all that was gained within that section of the amount or that month or months, and then you would get an idea as to whether or not the person was gaining or losing, right? And then cash flow provides data regarding all cash inflow a company receives from both its ongoing and future instances, right? So for persons who just start a business, the bank would want to see a cash flow, right? Your projections, what you anticipate going on that you may gain based on your plan, right? But if you're an ongoing business now, and I believe they say it's about 2 years, right? Or 18 months, right? They would want to see your net income statement. Or they may at some point in time want a balance sheet, but they would more so be in interested in the income statement. All right. So net income statement, profit and loss. Answer the question. How much did I earn? Right? Um, is a period statement like it actually states how much is it that you used over time. And then after you take away the expenses from the revenue, you would get the amount that you gained over time. Right? And the thing with the thing with um the thing with statements now is that you have to know where you would put each item, right? And that's where accounting is a bit tricky now because you need to know where you put each item. Do you classify it as an expense? What type of expense? Do you classify it as income, right? So for income, it would be sales, right? Revenue gained, right? And other income would be like when persons say stream of income, real estate, all of those other things that the company may gain income from, but it's not necessarily directly related to the products or the goods and services that they offer, right? So those, that would be under other income, right? For expenses now, cost of sales. Remember, I was telling you that cost is always considered an expense, meaning that for you to carry out that particular service, what did you use in order to carry out that service? So did you pay for printer ink? Did you pay for the paper? Did you pay for material that you had to use in order to build the product or to offer the service? That would be cost of sale, right? Office supplies would also be a cost. And then utilities, right? I don't know why they separated telephone,
Telephone and utilities.
right? It should be
As
on,
they are all utilities.
right? And then maintenance. And maintenance is the upkeep of the building. How is it that you would keep the place clean? Um,
The
some
upkeeping and such like.
Right, like cleaning of the place, persons coming in and ensuring that yeah, it's mostly cleaning, gardening, beautification of the facility, that is maintenance. But for some places, the rent goes with maintenance. So you would see where they put rent plus maintenance, right? Under one. Insurance
Okay.
also another. And then remember certain companies pay the insurance for their workers, right? Miscellaneous expenses, travel and entertainment, bank charges, payroll expenses. And payroll would be the same as salary, right? Now, you realize here that this person put tax expense here, but it's not supposed to be. It's supposed to be under here. So after you total all your expenses, right, and you total all your income, you would remove the total expenses from the total income to get what is called a gross income. Understand? And when you get the gross income now, you would take away the tax expenses to get your net income, right? Okay, everybody got that?
Definitely.
Right. Mhm. So the balance sheet is a snapshot showing what the company owns and owes at a particular point in time, how much is it that we invested and how is the investment being financed. So the balance sheet looks at assets, and we already know what assets are, liabilities, and then owner's equity. So this is the balance sheet. And when you write in a balance sheet, you have to make sure you do the proper title, right? So you would state the person, the company, where they're located. But right here, something is missing. You would say balance sheet as of a particular period. You have to state that. Because remember, a balance sheet is actually a particular snapshot over time, right? So you would say balance sheet over a particular period, right now it's first quarter, month of November, month of December, month of January, right? You have to state that. Then now you would list all your assets, right? And remember we say the checking account, right? As well as your cash account, right? So cash is an asset. So right here on that asset, you would put cash on hand or cash. You would put it here as well as your checking account. But this
One second, sir.
okay.
Excuse me. Hello?
Yeah, man, I'm here.
Dr. Tracy?
Yeah,
Yes,
man,
this balance sheet is not in the correct format
right, right,
because with the balance sheet, the fixed assets must be listed first with the most permanent
right,
and then the current assets,
right.
as well as the liabilities, the most current and right. So it's not in the correct order. So this one,
Right. So
machinery and equipment should be at the very top.
right. So a lot of these things, I actually use this because it points out a lot of the stuff that are missing, right? Sometimes it's good to show everything that needs to be there, but then when you actually show something that is going wrong, right? You can therefore go back and say, hey, well, Dr. Tracy had said this was supposed to be there, that was supposed to be there up there, right? So these are some of the things that could kind of help us to remember rather than having something that shows everything as though it's supposed to be. Understand? Hello?
Okay.
Yeah, man. So as she said just now,
Okay.
you would want to ensure that you have the fixed assets separate from the current assets, right? Remember, fixed assets, as we say, would be things that last longer, right, than the current. Current is things that we're using up, right? So machinery and equipment, buildings, right?
So,
Those,
sorry, just a minute. You just say like the fixed asset would be like the machinery and equipment?
well, the thing is, equipment can actually be used with machinery for over time, right? But if it's a case that, well, yeah, we probably should separate them for real. So the equipment might be something that you continuously be using up, but the machinery would be more of like a fixed thing.
Sometimes it comes as just one figure.
Right, that's true. But it's a bit tricky
Sometimes
with
it comes as
equipment.
just one figure, so there's no way to separate what is what.
That's true. I kind of understand the idea where you're saying maybe the equipment kind of be using up quite frequently, but I guess when they say the
Right.
machine and equipment is actually something that they're continuously going to just use. That equipment is not going to be something that you have to be changing frequently. So that's why they just group it as machinery and equipment, right? But building again, as you know, would also be a fixed asset, right? And then now your current, the cash, as you know, the accounts receivables, as you know, right? Inventory would be considered more of inventory has a mixture. You have stuff that you would actually be using versus stuff that you might actually be using for a long period of time, right? But normally they just group inventory as one figure itself. So this is more of like a summarized version of what you would want for your assets. But ideally, as someone said just now, you would want to have fixed be separated from current, right? And then you total them together as one to give you your total asset, right? And then liabilities, as we said, is the opposite of the assets, right? And the thing is, owner's equity is going to be at the last point of time when you have your assets and your liabilities and you list out your liabilities. The owner's equity is going to be like the last thing that you're going to add to the whole picture, right? Um, the owner's equity plus the profit or loss will equal the total equity, right? So if you're at a negative, and usually we represent negative in a bracket, you will be removing that loss from the equity and you will realize that the total equity will be decreased, which will mean that the person actually is having a loss. Anybody understand that? Hello? I'm wondering if
Yes, sir.
everybody got this area here about the owner's equity, profit or loss, and then total equity. Did everybody get that?
Can you run it over, sir? Because I was distracted for a minute there.
Okay. So the thing is, usually we actually put them under one heading, liabilities and equities. We spoke about liabilities already, as you know what liabilities are. You
Yes.
also know what owner's equity is, right? But you have to calculate the total equity, right? Which will be the owner's equity minus the profit or loss. And where would we have gotten the profit or loss? Anybody knows where we would have gotten the profit or
Um,
loss? Angela?
From the income statement.
Right. See?
Hmm?
Right. Good. Everybody got that?
yes, sir.
Right. So the income that we got from the income statement, which might be a negative or a positive based on what was received, and we usually put negative in brackets. That's why it's important for us to get the income statement. And then on when we go over to balance sheet now, we're going to remove or add it to the owner's equity to give total equity, right? Mhm. And the total equity and liabilities are supposed to be added together, right? Which would then now show what would be our performance over the year. Everybody understands that?
Getting there, sir.
So remember, it has to balance. Remember, it has to balance. I wonder if everybody got to see what is happening. Realize that the total
If
assets is exactly the total.
it's not balanced, it's not a balance sheet.
Eh? Right. I want everybody to
Yes,
realize.
so it's called a balance sheet. If it's not balanced, it's not a balance sheet.
Right. So the total
Right.
asset,
That's true if it is not balanced.
right? The total
But
asset.
sir, just a minute. What if you have everything accurate, set out accurate as is, right?
Right.
And you have some people still cannot balance it out, but it's still accurate right down the line to the last peak.
So something has to be missing for it not to be
Something.
balanced.
Okay.
Yeah, the person must be missing something because it has to balance. Because where did the money go? Understand?
True.
But it has to balance. So total asset has to be equal to the total liability and the equity. You have to get the same figure, right? And this is where a lot of accountants get in problem. If they can't account for this money, then I wonder if people stealing money and all of these things, right?
And then fix the book.
I, I they put on money for something
Or spend somewhere and they don't remember.
Right?
Okay.
Or then put in an additional expense or something to try to balance it. But eventually it's going to kind of
It's gonna
um,
pop up.
pop up, right? Because some smart person is going to sit down,
Exactly. That's where I was getting at, but I didn't want to come up and say it.
right?
Understand.
Gonna sit
Definitely.
down and they're gonna look back on it and they're gonna say, what this don't add
It's never the right thing to do because it always comes back to haunt you.
It comes
Always
back at
come
the
back.
end.
It's true.
Yeah.
Always come back to aren't you?
But for
Honestly.
persons who didn't know, this is how money can be lost from a company uh, through an accountant without anybody knowing because people just want to know that the balance sheet balance, right?
Yeah.
Just say, oh, all right, we're operating at a profit, but they could be stealing money from you and you don't even know.
Right.
Yeah. Right, and the linking the income and the balance statement. Generally, a balance sheet and an income statement are prepared and issued together because, in a way, they are twin reports,
Mm.
right? Mhm. So the income statement showing what happened over a period of time and the balance sheet showing the resulting condition at the end of the period, right? Mhm. All right. Since these statements are usually studied in relation to one another, it is highly desirable for them to tie together with one common figure. Right? You will see that the net profit or loss on the bottom of the income statement discussed earlier was that. And if you're looking at the equity section of the balance sheet shown, something about it's going to show where the equity was added, the profit was added to the equity. That's basically what it's saying, right? So either the profit or the loss, it would be removed from the owner's equity, right? Seems as if it's finished. It's not changing. All right, that was the last statement. So basically, that's a synopsis of accounts. That's all accounting is, right? Just ensuring that you create your income statement, getting whether or not it's at a profit or a loss, right? And then based on that, you would want to get your balance sheet would would show that you definitely have it balanced, right? And you would want to use the balance sheet to see whether or not you are having problems with your assets or your liability, right? Because you would see exactly how much is being owed to you versus how much you owe. It's kind of like a summary, really, even though it's just to get the two figures, but it gives you a lot of information as to where money is going, what money is being used for, and why is it that you were in a loss or if you were in a profit. All right. Any questions? Anybody? Questions for anyone? From anybody?
No questions, but I'm definitely gonna have to go through this slide.
Right, right,
Well,
right.
so
So,
far I think there's no question for me because so far I have a
right.
Yeah.
So
understanding.
the most tricky thing is actually the income statement. So go and research different income statement. This is a very concise income statement, to be honest.
Which one to research, sir?
Hmm?
Which one should we research?
The income statement, the net
Oh, the
income
income.
statement,
Oh,
right?
I have one question for you.
Hmm.
All right, in accounts, them have bad debt, right?
Right.
That's one thing that when I was doing accounts at the time, it was a challenge for me, bad debt.
To know where to put it,
Pardon me?
to know where to put it on this statement.
Right.
Hmm.
So
Right.
you will lecture us on that, right? And next another time.
Yeah, I can go through it with you. Yeah, man. Is it that you wanted a synopsis as to what bad debt is?
Right, right.
What did you understand? Let's get your synopsis first and see. What was your understanding?
Pardon me?
Yeah, I was asking what's your understanding of the whole issue of bad debt?
Well, I would say, well, for bad debt is maybe money that is overspent that you cannot give account for.
Mhm. Well, bad debt is money that you don't pay. So the loan is
Oh,
there,
true. That's why I call bad debt. True.
right? You're not paying the loan, right? But the problem is you're not paying the loan, meaning that you're not losing money. Do you understand?
Yes.
Right. So it's actually a good thing for the company. It's even though it says bad debt, it is actually considered a good thing because you're not paying. But
No,
in the life of,
actually, sir.
mhm.
It wouldn't be a good thing, sir.
No,
No, what I'm
one
saying is
second,
that,
please.
all right, let me show. It's not a good thing for the company, but it's a good thing for, what should I say, the financial of it. But as you know about the credit score and everything that's there, the long run is actually going to decrease your financial potential to get investments, right? As well as to get
Hello,
additional.
Dr. Tracy.
Yeah, man, you hear me?
A bad debt would be your uncollectibles, like for the accounts receivables for persons who owe you over a period of time and you're unable to collect. That would be a part of your bad debt. And after a period of time, you would normally write it off the book. So it's from the collection, from the accounts
But
receivables.
but remember, it's also considered a bad debt on your end as well, right? If it's a
Come
case
on the other on the liability side.
of the liability side. So that's why you need to
But
find out
in
what.
terms that's a
Hmm?
but that's a different name. In terms of bad debt, that is from a receivable side.
Hmm.
In the terminology sections, yeah.
Okay, because we need to
Yeah.
look at it at two perspectives because it could be that one persons owe you, right? And it reaches a point where you will never actually reclaim that amount. They have to write it off and say bad debt, right? But if you look at the other side, which is your creditor, right, who you owe, right, it would be considered a bad debt to them, right? And in the light of you, you would say that it's still bad debt. But as to where you would put it, it would determine, in my opinion, as to what type of bad debt it is, if you get what I mean. Do you understand? Hello?
Yes, sir. Yes, sir.
Hmm. Yeah. Any other questions?
Not for me.
But I believe it's more, if we're going to ever see bad debt, it's going to be the debt based on the person that owes you. Okay? So it would actually be persons that owe you that you can't receive the money from, but it is money that's supposed to be added to your it's supposed to be money that should be added to the amount that you have gained over that period of time. So I can see where the confusion is where you would put bad debt because it would
I'm
be
not hearing
off.
anything or anyone. Can anybody?
Are you hearing me?
I can hear you now.
Okay, right. So it would almost be like accounts receivables or notes receivables because it's more so related
It,
to customers that haven't paid for a very long period of time. But, but it can have.
usually they would have a provision for bad debt under the expense side of the income statement.
Okay, right. Everybody got that?
Yes, sir.
Hmm. All right. So if we have ever reached that point where we have to put that in, just know that it will be on the expense. All right.
Yes, sir.
Okay.
Yes, Dr. Lawson.
Any other questions?
No, not at the moment.
Okay. Well, just to say that this was important because I want you guys to be a bit different from persons, other medical assistants, right?
Yeah.
I want when you go there, you can say, hey, well, I know how to make an income statement. Like it might not be that
Hmm.
you have advanced knowledge about it, but you're able to identify or to read an income statement. You're able to have basic um, information inputted, right? And basically for like a doctor's office or a medical office, it might be quite, it might not be that easy, but compared to other entities, it is something that you are able to create an income statement for. Miss Blagrove, Miss Blagrove here,
Yes, Dr. Tracy.
right? Is that true? That it's that for healthcare, it's probably one of the easier entities to create an income statement or compared to other entities. Would you say that's true?
No, I don't think so.
It's the reason why I call on you, right? Tell me why you think that.
Um, mm, when it comes to health facilities,
Mhm.
right? There are so many areas, Dr. Tracy,
Right,
where yes, there are so many. It will be a large, what should I say, an
right,
entity with quite a few departments and stuff like
right,
that.
right. That is true, right? Because that's one of the things that I wanted to bring forth. 'Cause that's why I was saying that, but I wanted somebody to attack me and say, hey, no, that's not true. But that's why I had to call on you because healthcare is very, very complicated. You have so many different departments, so many different expenses. Persons have to be managing whether or not it's a pharmaceutical, especially pharmaceutical. Isn't that correct?
Yes,
Pharmaceutical is a
yeah, that's true.
big, big thing, right? And then there's payroll. I have payroll for doctors, payroll for
So
nurse.
for nurses,
Right, right,
admin
For
staff,
janitors, for different departments.
right.
yeah,
As
Mm-hmm.
opposed to just one entity where they just deal with just one thing. Then
yeah,
it's
that's
more
true.
straightforward. So you can imagine the headaches that the accountants have for health at the health department because it's a lot, right? All right. So I don't know if we could go through a little of the plan moving forward for the rest of the curriculum. Let me just quickly go through that and then we could end at about 6 o'clock. Hold on, let me get the curriculum up. Remember, if you're in the group and you're having some trouble following everything that we're doing, don't hide away, message me so that we can go through it together, right? Just getting the curriculum up. Hold on, buddy. Email. a bit. Hold on. All right, so we went through medical law and ethics, right? And the healthcare management and accounting, we just ended that. And then the big realm of it now is medical assistant practices, right? These two words are a little add-on to what we wanted you to have as a medical assistant. So it would be a little bit different from everybody else, right? But the major thing is the medical practice portion going on. Taking some time to load up. Oh, is my internet? Hold on, it's coming on. Mhm. All right, so we're not gonna really pressure you in terms of the exams. We're just doing maybe like some assessments, as was done with healthcare ethics and law that Dawkins did, and we went through health information technology already, and then we then finished off with healthcare office management and accounting. All of that, all of those notes are posted in the group. So you can recall those so that when we're doing the follow-up next week and we're moving a bit fast, then you guys will kind of have a synopsis as to what we were all talking about. And then we went through accounting just now. And next aspect now is medical assistant practice, which is it's long because there's a lot of stuff that we have to go through. We're going to go through physiology, right? So the different systems, central nervous system, gastrointestinal system, cardiovascular system, respiratory system. And the aim is to ensure that you get thorough knowledge of each of the body systems so that when somebody comes in with a particular condition, you're able to identify and to kind of activate a certain skill that we might show you for each. So take for instance, somebody comes in with vomiting, right? And what are some of the things that you would want to do? Get them a container so that they can vomit, right? Don't have them standing, let them have a seat. Don't put them flat, especially babies. You wouldn't put them flat, right? They can choke on the vomit. somebody that has like a seizure, what are some of the maneuvers that you would do for somebody that having a seizure,
Right.
or somebody that had just came in and had a stroke or having signs of a stroke, or somebody that fainted, right? Somebody that's having respiratory distress, like shortness of breath, asthmatic, person who suspected of COVID-19. How is it that you would kind of assist with the management? It might not be the case that you would offer medication, but at least there are certain things that as a medical assistant you should do until the doctor is able to reach the patient, right? And then medical record keeping as well is important. This section is going to be a little bit long, right? It's fun.
Okay.
And then medical record keeping, how is it that you accurately document um, someone's information? What are some of the things that you're supposed to look for to identify a patient or to ensure that the patient is actually that patient, right? And that's where ownership of records come in. So when you create the record and you're supposed to pull back the record to decipher the information to the patient or to the doctor, you would want to ensure that the patient record belongs to the right patient, right? So it's not just the name and date of birth, but the demographics, the rest of the demographics are important as well, where the person lives, right. Middle name is also important, right? Because we've had cases where the person has the same name, same date of birth, but it's two different patients, right? And the only thing that actually separated them was actually where they live, right? So you have to be very careful, right? And we're also, well, online medicine is electronic, so you will be exposed to electronic medical records, as well as we're planning to show you a bit of like online chats. How is it that you could probably create your own online chat, um, as well as managing electronic appointments, managing booking electronic appointments, retrieving electronic data. Those are some of the things that we're planning to show you. And then the practical component, of which it may be mostly demonstrative because we're doing it mostly online, but we're also going to have a period where you have to be doing it. If we're offering persons to come into one of the three locations. We have a location in Kingston, we have a location in Portmore, and one in Spanish Town. So any of the three locations you could come to if you want hands-on experience, but otherwise you could get the experience through demonstrations to the nurses. So we have two nurses that's going to be doing this part. Yeah, two registered nurses. So they will do this section here, the whole vital signs.
Question. In terms of the offices that are open, is there like a set time or date that we can come by? Because I'm closest to the Portmore one, so I don't know, like there would have to be a set time first.
Well, Portmore closes at 7. The rest actually closes at 5. So you could go to either of the
Yeah.
of them, but the Portmore one closes after 7.
Okay.
Mhm. And then yeah, and that's basically would be it for the medical portion, right? So this part, the medical assistant part, is going to be the longest. It would take a couple months, right, to complete. But yeah, it will be possible. And then you would be handed over. Well, Orintoma is going to start her aspect, which is the paralegal. So we might have to be running both the paralegal and the medical assistant to kind of catch up for time. Um, and that shouldn't be much of a problem because hers is mostly theory, basically. All right. Mhm. Any questions about the curriculum or the plans moving forward?
Just one. I wanted to know if like the other students would be okay with us like having one-off online sessions to revise independently.
Okay.
If anybody would be interested, I would actually love that. So we can just like, hash through
Okay.
all of the stuff.
Right. One of the things that I wanted to ask was if there was a possibility that we could do another evening in the week. I don't know how possible that would be because yeah. Suggestion?
We can definitely come to a consensus. I'm usually most available at around 6:30 evenings. I don't know. Anybody else want to chime in with a time or if the week would be a good time?
But it's Mike, okay, find out who it is. We can. Hold on.
Yeah.
Patrick, I'm gonna just mute Patrick. Cool. Yeah, so I was asking if there was another day because the 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 thing that we have to do as well is that we have to meet all the requirements for NCT vet, and they sent me a document of which the amount of work for the paralegal is a bit higher than what was anticipated for the medical assistant because most of the curriculum that I had created was the medical assistant, right? So I could account for the time period as to what it would take for the medical assistant, but I wasn't able to fully determine what would be the amount of time that would be needed for the paralegal. And apparently it's almost the same amount of time that you would need for the medical assistant that you would need for the paralegal, right? So to meet the requirements, because it's 2 exams you're going to be doing, one for paralegal and one for medical assistant, so that you can get 2 different certificates. So at the end of the day, you would be getting a certificate for paralegal and a certificate for medical assistant. Right. So I'm not sure if there's a particular day, another day during the week that we could agree on in terms of doing classes. Even if it's late in the evening, then I don't really have an issue like 7 or 7:30 or so. Just for like an hour.
Yeah.
Any day except Tuesday is fine with me.
In the day,
I was gonna say Wednesday, like 6 or 7 would be perfect.
okay, okay. Alright,
Wednesday is fine with me.
Wednesday. Okay, Wednesday. Wednesday is what? Wednesday. Do I have anything on Wednesday? Okay, all right, we could put it for Wednesday then, right?
Dr.
Okay.
Tracy, I have classes from Monday to Thursday, sir.
Oh, okay. What
Class
time?
from Monday to Thursday.
What
From
time?
7 to 10. 7 to 10 in the night.
Oh, 7 up to 10. Okay.
Anybody else have any other classes from Monday to Thursday?
I mean, if there was 2 people on this planet, they'd get it back into the water. But you can't.
Because why I
So
suggested
could we,
Wednesday.
is it possible for us to do it early in the morning or that's too early?
Yeah.
No.
So I say.
Yeah, I definitely have some time in the morning, so I usually be available 7 to 8.
I don't know if everybody wakes up early.
Yeah, exactly.
We could do an hour in the morning.
On which day?
Well, we could try same way. Well, Wednesday's out because I have to be on the radio on a Wednesday morning.
Okay. So which day would be better for?
Could we put it for Tuesday morning?
Don't have anything else.
Tuesday morning, okay with
Time,
that?
sir?
we could start at 7.
Mhm.
Even if you're on your way to work, you could just listen. Right?
Yeah.
Lori, should we
Give me a
All
second.
right.
All right. No,
The
just-
Tuesdays at 7. Anybody in a position? All right, that's okay.
It will be 7 to 8.
Yeah, 7 to 8 o'clock.
Okay.
Dr. Tracy, what about Friday evening? I know most persons, the Friday evening after
Oh,
the week work might be, but what about Friday evening? Could you consider Friday evening, sir? I don't know with the others.
okay, Friday evening, it would probably have to be about 7:30 for Friday evening. 7:30 to
Friday is definitely out for me.
is out. Okay, Friday is out. Mhm. The only other option is for us to extend the Sunday.
I think the Sunday is fine. Just extend the Sundays. Who can go? Well,
There
the
is one,
morning period would be
there is
okay.
Yeah,
one,
I think we can work with
just that
extending the
it's
Sunday.
just that there is one person in the group that might have a little challenge. Miss Bagro, she's gone. Yvette,
Yes,
are you
Dr.
hearing me? Yeah, man. I think you were saying that there might be a challenge with you on a Sunday to extend it, right?
Yes, 6 o'clock is when I have to cut off on a Sunday evening.
Okay. And okay. So that would be the little challenge that we have for Sunday. Could Yvette, is it possible for us to send you the rest of the recording on the Sunday, or you're
No problem. No problem.
okay? All right,
I'll work.
all right, then cool. So what we'll do, we'll just extend it on Sunday so that we could meet all the requirements for both of the courses. Okay. Everybody is okay with that, right?
Yes, sir.
Okay. All right, then no problem. So remember next week I'm gonna just forward back all the lecture and the stuff that we're done. I'm gonna also reach out to Ms. Dawkins and ask her to forward back everything, including the answers for the assessment that was done. And then we just do one big recap. And then now I believe the second week is going to be where Miss Orin Tom are going to start her thing, and we will also start the medical assistant portion next week as well. All right. Mhm. So that's basically it. Take care, everybody.
All right.
Thank you very much, sir.
Yeah, man, no problem. Bye.
Okay, thank you, sir.
You're welcome.